Happy New Year, everyone. Happy 2019. But be careful what you wish for. You just might get it. So, the reason I'm doing today's live stream is, first of all, I'm not as hungover as anticipated, so that's good news for me. Second, because I saw two tweets from President Trump yesterday within about an hour of each other on January 1st at 5:44 p.m. and at 6:39 p.m. So I'll read you both of them for you guys because I think they're important. So the tweet at 5:44 p.m. was, quote, "Gas prices are low and expected to go down this year. This would be good, exclamation mark," end quote. The second tweet at 6:39 p.m. yesterday, quote, "Do you think it's just luck that gas prices are so low and falling, question mark? Low gas prices are like another tax cut, exclamation mark," end quote. So, I'm going to explain that it is fun following President Trump on Twitter. He is a master troll. He is an epic troll. He's been messing with people in the media back and forth for years. However, in this case, he may have bitten off more than he could chew, and there will be unintended consequences because he is not thinking about the oil market in a good way. So yes, for the American consumer, low oil prices, low gasoline prices is good. However, we have had a bust, or about to have a bust, in the oil market. So the oil prices are down, I believe, more than 30% now since October. So, oh boy. President Trump saying that he enjoys low oil and low gasoline prices. I don't mind paying at the pump, but I'm telling you as a market analyst, someone who studies markets, that there will be unintended consequences. This will not be as good as anticipated. We are at, when I'm doing this live stream, we're at WTI $45.78 and Brent crude at $54.54. And if you're a Canadian oil company, I believe there's a $20 give or take discount to the WTI. So that's even lower. My New Year's party was okay. I don't want to go into the details because we're going to keep it a family show. Send me a message after the show. But I didn't have too much to drink. My hangover was not too bad, but there was some weird European stuff that some... Okay, I don't want to go into it. There was a bearded... I was talking with this really pretty girl, and I didn't know apparently that she had like a... After the party, that she had like a hookup buddy or a boyfriend already, and apparently like this tall bearded European guy grabbed my butt and invited me to some type of weird European orgy with a couple pretty girls and a couple like bisexual European guys, and insinuated that there would be club drugs there. So I turned that down and got the hell away from there. I don't know why I'm talking about this in public, but whatever, I freaking don't care anymore. Actually, I'm going to be dropping a lot of truth bombs in this show. A lot of you guys are probably not going to... Some of you guys are not going to like a lot of the things I have to say during the show. Okay, so President Trump, unfortunately, I think President Trump, the next 2 years, and he will probably win re-election because the Democrats do not really have a strong candidate, even though a lot of Democrats... There is a large voting block of Democrats, but they're so divided at this point and they don't really have a strong candidate that President Trump will probably win re-election as of now. But whether Trump is in the White House for 2 years or 6 years on re-election, he is essentially a lame duck president. And it will get worse. And that is because the Democrats have the House of Representatives. They do have a small minority, a small majority. And look at how little Trump was able to accomplish with the Republicans in Congress. And this is because of the bureaucracy. So for every one like corrupt bureaucrat that James O'Keefe and his team of investigative journalists at Project Veritas catches on video admitting that they're sabotaging things for Trump, there is literally hundreds, if not thousands, of bureaucrats here in the Washington, D.C. metro area and elsewhere, federal government bureaucrats that are figuring out ways to block and sabotage, openly knowing that now the Democrats are in Congress, that most of them will not get criminal charges or anything. Worst case scenario, they lose a job, but they get references and can get another job. Okay? This is how corrupt and bogged down the system is. So Trump is going to end up, if the stock market does crash, Trump is going to end up like Herbert Hoover. Okay? The pro-Trump people that listen to this podcast that still believe Trump is going to be able to do something, a lot of the promises Trump has made us have not come true. Now, we do have the Supreme Court justices and some of the other stuff, but I just saw this today on Fox News before I went to the gym. Drug prices are up. Some non-generic drug prices are up 7-fold since 2006. Now, obviously, you can't blame President Trump on that. That's a combination of corruption on both sides of the aisle in Congress, but he's not going to be able to stop this. The FDA wants this. Big Pharma controls both political parties, so he's just not going to be able to accomplish very much. He has slowed down a lot of the problems that were happening, so he's bought us some time. He's bought you guys listening to this podcast some time to adapt. And for our European listeners, unfortunately, it looks like Europe is probably going to collapse first. So the United Kingdom and the European Union, without currency swaps increasing, Europe is in big, big trouble. T-minus less than 2 years for Europe without the currency swaps. And the U.S. is being given a pass for now, more rope to hang themselves with long term, because the market views Europe as the bigger problem. Okay, so the oil market analysis, actually got a couple more things on Trump's tweets. Yeah, I honestly think going forward, now that the Democrats are in control of the House, they have the majority there. It is a slight majority. It's not a super majority or anything. It's going to be, and the Democrats have almost full control of their bureaucracy in almost all major government agencies, that it's going to be President Trump's going to be able to accomplish next to nothing. I'm sorry. It's going to be very, very little. Look at how hard it is for him to get just funding for this part of the wall. And imagine once the Democrats are in full control of the House. I'll talk to listener questions later. Sorry, I got a little off track. So, you know, tweets. He's sending out, guys, he's wasting way too much time sending out tweets. He needs to stop sending out tweets. Or if he claims that he's sending out all the tweets, but I've heard that he has a couple people helping him with it. He needs to stop doing the tweets as much, okay? He needs to stop that. He needs to focus on actually working and getting deals done. Okay, getting things done. He needs to cut back spend those couple hours a day extra on getting other stuff done than the tweets. Okay? The tweets are not gonna, some are really good, a lot of them are funny. He's a really good troll, but the tweets are not going to accomplish things. And if he's taking credit for the oil price falling, he's also going to have to take blame then if there is an oil bust and the deepwater offshore oil producers, they either go bankrupt or lose a lot of their sales. The oil service companies like Schlumberger and Halliburton and a lot of these other companies, their sales get cut drastically. And, you know, leases on land in Texas and Oklahoma and North Dakota and real estate prices there and the other economies around there that are centered around the oil, those start to falter as well. Okay. So saying that, I did a short video on this a year ago, in January of 2018. So you can go back through the archives on the channel, and I made a short little video about the oil market talking about the global economy needs a Goldilocks oil price, okay? Can't be too high, can't be too low. It has to fluctuate in the middle. And if the oil price gets too low, the producers of the oil, or the drillers, the oil service companies are risking going bankrupt. And that means loss of jobs, that means loss of tax revenue for the government. And if the oil price gets too high, that acts as an enormous tax for the global economy. The consumer starts to figure out ways to reduce their oil consumption. They carpool. They don't drive as much. They take public transportation. Maybe they walk or bicycle somewhere if they can, etc. So that's my thesis for the Goldilocks oil price. And we are at the low end now of the oil price. So if the oil price stays this low for a while or goes lower, you're going to see a big bust. And President Trump is claiming that low gasoline is really, really good for the U.S. economy. Well, maybe it'll put a couple $100 back into the pocket of an American middle-class family or working-class family. But it could also mean, on the other hand, that oil workers in Texas, Oklahoma, North Dakota could lose their jobs. So I'm telling you as an analyst, just because someone's saying one thing, we have to look at the other side, like Frederick Bastiat, the unintended consequences, the seen and the unseen. Well, he wasn't technically an Austrian school economist, but he would have been had Carl Menger and the others were coming up with this. So Frederick Bastiat, go and read him, seen and unseen. Okay, so in today's economy, Apple just announced that they lowered guidance. I mean, this was obviously coming when they said they weren't going to announce iPhone sales, but we found out they're blaming a lot of the problems on their China sales. Okay, so I've been trying to tell you that there's big problems in China. Anecdotally, there's a lot of YouTube videos out about this. I've heard this from friends. Actually, the more China videos and analysis that I've been doing on China, I've been getting emails from people, expats who lived in China, either Americans or Europeans, telling me, Jason, you're all wrong. There's actually Chinese people who want to leave China. And I was thinking to myself, okay, thanks for emailing me. Now you've kind of, you're not aware of this, but you've kind of made my argument that not only are Americans and Europeans leaving China, and a lot of people living in China want to get their capital, their savings out of China and out of RMB. But actually, from what they're telling me, and they used to live in, some of these people who emailed me used to live in China 10 or 15 years and no longer live there, by the way. They're saying that a lot of people who are Chinese, who are from mainland China, want to get the hell out of there too. So I think the more I learn about China, the more I hear about China, I honestly think it's a house of cards. And they're going to be very lucky to, like, engineer with central planning some type of Japan soft landing where everything didn't totally collapse. And, I mean, a lot of the Chinese business model, besides the factory, so there's a lot of Chinese data that's been coming out for weeks and months now that's just bad in a lot of different areas. But, you know, factory production is down in China. A lot of their business model, besides making cheap stuff, was stealing intellectual property from corporations in Japan, corporations in South Korea, corporations in Europe, and corporations in the United Kingdom, and American corporations. And they've been doing this for decades, guys, just blatantly stealing it and not paying any of these corporations anything for it. So now that the global economy is shrinking and you have these corporations worried about their stock price, worried about their bonuses, and these governments that are worried about tax revenues, that they're going to start putting up trade tariffs and barriers, and they're going to be fighting over larger slices of a shrinking global economic pie. So all these governments, they might have not put in the effort in the past to stop China from, you know, stealing intellectual property and research and development essentially for free for decades. They're going to be clamping this stuff down. I can guarantee you that this is the new normal going forward. And I've heard anecdotal stories from businessmen where it was a large corporation and like an American or European one, and they were negotiating a deal with a Chinese corporation, and they decided after a while that they didn't like the deal and they walked away, and in a week later the Chinese government hacked them and stole all their stuff off their server for free. So you tell me that that's good business practices, and that's, I'm not, obviously the US government and the Chinese government are both doing bad things. I honestly think no government on planet Earth right now is doing a good job. I don't trust any government right now. And if you're a libertarian, small government oriented, free market oriented, I don't think you should trust any government at this point either. You should be skeptical and distrustful of every single government on planet Earth. Actually, from Eddie, the only rule is rule number one. The governments will change the rules to benefit them. Look at what the Cuban government just did. One of their best exports out of Cuba was their Cuban Major League Baseball prospects, and these guys were signing multi-million-dollar contracts, and the Cuban government was getting zero. In fact, the Cuban government was eliminating food rations for the baseball players' families, and also like doing other very mean, very draconian penalties, both economically and food and torture and prison and stuff. So if you were a Cuban baseball prospect like age 18 to 22 and you tried to get on a raft to go to Miami or the Dominican or Mexico or something and you were unsuccessful in your attempt, they threw you in prison for 6 months. Well, now the Cuban government, because they're basically bankrupt and they're desperate for money, now they just negotiated with Major League Baseball a new posting system. So now the Cuban government's going to be making about 20%, 15, 20%, it scales up, of all these contracts that their Cuban elite talent signs. So it just shows you that when governments are losing money, when they're almost bankrupt, they just change the freaking rules. No, I don't follow the repo market, but I do have a few things similar to that later in the show. RR. Okay, so the oil market analysis is that if the oil price stays at these levels, the deep water exploration and production companies that focus on that, the drillers that do deep water stuff, they will get some business. Like Seadrill, I think, has like a couple weeks ago, they said they had about 98% of their usage rates with all their rigs leased out, but they've had to lower their prices a lot. So this is a very leveraged business. All these companies have a lot of debt on their balance sheet. This is not good. The deep water companies are in big trouble. Big trouble if this persists, the oil prices. And the oil service companies are not, they're going to lose a lot of business. They'll survive, but those share prices could crash even more. And you have the master limited partnership companies. The tax laws changed on those. So you have a lot of oil stock analysts, like newsletter writers, recommending master limited partnerships when the tax laws are very uncertain. So I wouldn't touch those either right now. But in the long term for the oil market, guys, at this low in oil price, and Chris Martinson and Steve St. Angelo of SRS Rocco cover this a lot better than me, there's been basically 5 to 7 years where a lot of the private sector oil companies and a good amount of the national oil companies have underinvested or not invested at all in finding new oil. And so the only major oil production growth that you've really had globally, a lot of it is from the US with the shale boom. So if you're an American, you're insulated from this compared to the lack of oil exploration, oil production growth in other countries. The repo market may be that the banks don't trust each other anymore. That could be the banks are charging each other higher interest rates, because remember, LIBOR, I think this started about 12 to 18 months ago. LIBOR started to rise too, and LIBOR is the London interbank operating rate, and that means that the banks for interbank, right? The banks were lending each other, and LIBOR is spiking because the banks don't trust each other. And in my opinion, my educated guess is that the European banks, a lot of the banks were distrustful of the European banks, because they saw that even though the stock market was still rising, they saw that the European banks, the things were going bad. Oh, I'm not worried about the gold price. I know the last live stream I did before the New Year's, you guys were like, oh my God, gold flash crashed. What are we going to do? And I was like, yeah, gold's kind of in an uptrend. I mean, if it does dip and you don't have good gold position for gold and silver and a select amount of gold and silver stocks, then you should look for buying opportunities there. Obviously, you should not buy all of your position at once. This is the most common mistake. This is not financial advice, but I'm just saying the anecdotal evidence I see of people in the gold and silver community. The number one mistake people make is they buy all of their gold, all their silver, or all of their gold and silver companies all at once. It is by far the number one mistake. It happens all the time with people I talk to, even people who are good in business and then are trying to make money investing. It's a different skill set to make money investing and trading in different markets than building a business as an entrepreneur or small business owner and scaling your business. It's a different skill set. There's some similarities, but there's a lot of differences. And you're going to make very expensive and very painful mistakes if you think you know what you're doing without like buying good research and learning more. Well, we knew that the yield curve was going to go inverted. Okay, so I wanted to bring that to attention there about President Trump, about the stuff going on with the oil market and how he's saying how it's so good for us Americans that we have low oil and gasoline prices. Well, you know what? If this persists, there's going to be a bust. People are going to lose their jobs. If you had a restaurant or some other type of service sector business, service industry business around a oil area, it's in jeopardy then if this continues, this weakness in the oil price. So just because we have low gasoline prices does not mean everything's good. President Trump also, this is something I saw very interesting that caught my eye. Where was it? Okay, here we go. So this was from Friday, December 28th, 2018. Trump administration asked top hedge fund investor for advice how to halt market rout. So this is just an educated guess on my part. Which hedge fund investor? It doesn't say. So CNBC reported it. My educated guess is it was either Carl Icahn or Leon Cooperman, because Leon Cooperman has publicly admitted that he had dinner at the White House. And Icahn almost got a cabinet position. So my guess is that Trump is talking to Icahn and or Cooperman. Those would be my top two suspects. And I'll just read some of this article. So, confirming once again that all that matters to the current administration is the stock market, CNBC reports that a high-ranking Trump administration official reached out to at least one notable hedge fund investor for advice on markets after the record Christmas Eve rout, which saw all major U.S. indices tumble more than 2% as rumors swirled that President Trump was contemplating firing Fed Chairman Powell. It is unclear who the, quote, well-known investor was. I told you my educated guesses. I think it's one or the two or both. The source told CNBC that the administration was, quote, determined to boost equities, which have become a key barometer of Trump's success, at least in the president's own view. The investor was said to tell the official to tell the president, this sounds like the game of telephone here, to end his criticism of Powell on Twitter, stop administration turnover. Trump doesn't have as much control over administration turnover as you think. Anyways, I added that part. And reach a trade deal with China in order to help markets. So the trade deal with China, like a legitimate trade deal with China, there may be like an announcement soon about some type of trade deal, but it would be bullshit. Because like I said, with the intellectual property stuff, I don't think there's going to be, because China's never going to agree to it. If you watch the videos and how China has changed in the last 10 years, especially in the last like 3 or 4 years with President Xi there, mainland China, I don't think there's any way that China is going to agree to any of those intellectual property laws. So I don't think there may be a trade deal in name only where Trump tries to sell it to the American people that it's great, like, but it would be lipstick on a pig bullshit. Okay, let me just check my notes really quick. Covered the oil market. Yeah, so if Trump persists about that he wants low oil, low gasoline prices, and he wants them lower, and he's getting the Saudis to keep increasing oil production or maintaining oil production, the effect, the unintended consequence, the unseen part will be that there will be private sector oil producers that could potentially go bankrupt. Those hedges on some of the shale oil producers, those hedges could run off. We saw this a couple years ago with some of these oil producers, MLPs like Lynn Energy and others. They were hedged for 3 or 4 years, but the hedges started to roll off and they got in trouble because of how much debt was on their balance sheet. Omar, is oil a good buy right now? It depends. This is not financial advice. There are going to be bankruptcies in oil if the oil price stays this low or goes lower. So there will be some bankruptcies in oil. So you have to know how to read a balance sheet to look for debt. When the debt is due, you may have to read the quarterly report and the annual report under credit risk. They'll list kind of the debt, how much debt, the maturities of the debt. And then you have to look at the hedges or the production costs. The problem with the oil industry is the oil industry is not good at stating their real production costs. The mining industry already went through this snafu for gold and silver. And most of the gold and silver miners, primary ones, are doing a better job of listing their real costs or close to their real costs. A lot more transparency. The oil industry, not so much. So if you're a trader, there's more sophisticated ways to play oil, but the OIH, the Oil Industry ETF, which is Oscar Israel Henry, that ETF is been cut in 50%, has been cut by 50% since May of 2018. So the oil services companies, there's been a huge drop in those. The oil market, it will eventually rally. There is long-term demand for oil. I also think the weakness in oil is also because weakness in China. Okay, I think the low copper price, the low oil price is because the market is well aware that there are problems big problems in China. Because 2 of the main commodities consumed in China besides agricultural commodities and food, and I think, the food commodities are more likely to rebound, even if China has some type of like financial crisis or they do a stimulus package like a QE program. But the copper and the oil are not doing well, I think, a lot based on China due to weakness in China. But the food commodities should rally because the Chinese government will most likely subsidize food in the event of like there's I don't know, factories closing. Probably not factories closing because of what my source said. My source said that a good amount of the factories are already getting bailouts. They've been told to keep producing, and that the Chinese state-owned banks are not going to call in the loans, and that piled the inventory sky high. It doesn't matter. We don't want a revolution with the workers. So if that scenario holds and they keep bailing out people in that way, I think they would make sure that a lot of the people have some type of food. I think inflation in China has been double digits for a long time. I've spoken with people who have lived in China. I have some friends there still. I don't know if they moved away, but they moved there with General Motors. When General Motors opened the first plant, Dan Collins, he's in the archives of Wall Street for Main Street Channel, and he said that China has had double-digit inflation for a long time. The thing is, though, is that a lot of people live in China are so used to, like, how crazy the government is and inflation and devalued currencies, they don't really complain anymore. Of course they hide it. The Chinese guy, who do you think they learned it from? They've improved on how to do economic propaganda from Europe and the United Kingdom and the US. A lot of people in the Chinese financial, like People's Bank of China and the sovereign wealth funds in China, they worked on Wall Street. Or they went to Ivy League schools in the US or London School of Economics, those things. So they learned it from there. Okay, so we had a listener request about Eurodollar Season 2. So when Eurodollar Season 2 came out, within a couple weeks, I either did a short video or a live stream show about it. But basically, I'll just summarize it really quick, that Jeffrey Snyder is a brilliant guy, but the correct phrase I'm thinking of, he frames absolutely everything he thinks about in the global economy, different markets, derivatives, banking system in terms of the Eurodollar, okay? But he admitted that the Eurodollar market total is only around $15 trillion. And so I want to put things in perspective. You know, it's crazy that we're saying that 15 trillion is not that much, but I mean, considering all the crazy games that have been played in the over-the-counter derivatives market and how much bailouts were done just in 2008, 15 trillion is no longer that much. So with the Eurodollar, it took decades, many decades, since like the 1950s of dollars and treasuries overseas in Europe to get up from billions to trillions, okay? Now, let's put things in perspective. The central banks, the Federal Reserve, gave the European Central Bank and others that much money, $16 trillion that we found out from the one-time partial audit of the Federal Reserve. Ron Paul got us that, and both political parties, Republicans and Democrats, John McCain and Bernie Sanders, all agreed to the one-time partial audit. The Federal Reserve, so the Eurodollar put around 15 trillion, according to Jeffrey Snyder, in liquidity or whatever into the system in exposure. So large number. However, with the currency swaps and the other bailouts, the central banks, the Federal Reserve and the European Central Bank, that was done in about a month. Okay, at the height of the crisis in 2008, and then later when Ron Paul got the partial audit, we found out that $16 trillion minimum was put into the system in a very short record amount of time. So saying that framing everything, that the Eurodollar is the most important, that we have to look at every single market in terms of the Eurodollar would be inaccurate. Currency swaps from central bank to central bank, and by the way, there's only two major central banks that are doing currency swaps, and that's the U.S. because they have the world reserve currency, and the People's Bank of Japan, which is laying debt traps. Excuse me, not People's Bank of Japan, People's Bank of China, PBOC, which is laying debt traps now with the One Belt, One Road and other stuff. They're literally giving some of these tiny little countries 10 times their GDP in debt or currency swaps to get them hooked on debt and then steal like a port or something. Steal some type of asset, natural resources or a port or asset. So there's only two main issuers of currency swaps, okay? But putting things in perspective is key. So the Eurodollar, the way I would think of the Eurodollar I listened to both seasons of the Eurodollar University, and it's very interesting, but I think his conclusion is wrong, is that the Eurodollar is just a piece to the puzzle, okay? It's a pretty decent size piece at like 15 trillion, give or take. Maybe he's wrong about the size, but if he's right about the size and it's only 15 trillion, compared to what's been put into the system with currency swaps and the over-the-counter derivatives market and, you know, the banking system bailouts and all this stuff that's going on now, the Eurodollar is not big enough to change any of these things massively. Okay? So I know my listener who's listening to all my podcasts now, he asked about that. I just did that for him. Normally I won't do stuff like that. Okay, so First Majestic Silver case study. Remember 6 months ago I was doing videos. I did that in-depth silver video that I spent about on the 3 top silver miners, the largest producers. I went through all their financial statements and pulled out screenshots, not screenshots, you know, stuff from their PowerPoint presentations, and I was doing analysis on that, talking over that. That took me 6 hours. And about 6 months ago, 7 months ago, I said the First Majestic Silver, if they didn't execute on their cost cutting, would have to do another emergency capital raise. And look, I was right. They just announced another emergency capital raise, another equity offering. They're doing it at a bad time. The silver price had a rally, and boom, First Majestic Silver just did an immediate capital raise. It's not a good sign. I'm not saying First Majestic Silver is going bankrupt. I'm saying that they were blown through their cash position. They had $100 million in cash on their balance sheet for many years in a row, if you look through their financial statements. And then this past year, it dipped from $100 million down to $50 million very, very quickly. And normally that's a warning sign. So they put the money, what they thought was to good use, that it would investments into their roasters at their different mines to lower their all-in sustaining costs. And if they execute on time and on budget, it should work out. But from them raising capital, that tells me that they're worried they're not going to execute the investments with the cost lowering on time and on budget. So I don't think First Majestic Silver is in any danger of bankruptcy yet, but this is a warning sign. So hopefully, I like Keith Neumeyer and those guys over there. Hopefully they will be able to lower their production costs quickly, because they just did the emergency capital raise, and that's a big red flag. Hopefully they don't have to do another one. Hopefully they don't have to sell any gold or silver streams, but you never know. So I think we're seeing, there's an interesting article that just came out a couple days ago from Jim Quinn of the Burning Platform, actually yesterday. So Jim Quinn of the Burning Platform, and he's been talking about, he summarized a lot of the same things I've been talking about now for months, about how drastically things are changing, like with the political and social climates in the US and Europe. And so his article is called 2019 from a Fourth Turning Perspective. So I think you should take a look at that. I'll attach a link to it in the information section of the live stream show after it's done. And unfortunately, I see a lot of the same mistakes that were made in the 1920s and 1930s in Europe and the US. They are being repeated. So yes, we have better technology. Yes, we have social media. Yes, we have communication that's almost instantaneous now, but people don't change too much. In fact, some people never change at all, unfortunately. But I think a lot of the same mistakes that were extremely painful lessons for that generation of adults, a lot of the same ones are being repeated. And a lot of that has to do with the popularity of socialism. So I think the best case scenario going forward is going to be more inflation and more taxes in a lot of different countries. And you're going to have the mainstream financial media, which, by the way, is still telling people that we're in a bull market and this was just a correction in stocks. Meanwhile, they have the same guests on every day who have been wrong all the way down 20%. Same guys who may be paying people at CNBC $40,000, the booking agents. I've heard stories where some people hire like a booking agent for like 50 grand and they make the calls to get the interviews booked. They know the producers there. But you have these people who are not being called out for their bad stock market calls, who are not taking any ownership or any responsibility for their bad calls, and then pumpers like Brian Kelly on CNBC that are lying, and other people that are saying to buy the dip in stocks because it's not really a bear market. I think the odds are it is a bear market. And I think we will have some bear market rallies along the way. Peter Schiff says that bear market rallies are stronger than the drops. Not necessarily, it depends. So we'll see. Unfortunately, guys, I think in a lot, I don't know which country all of you guys live. We have listeners all over the world now, but I think the future is filled with a lot of inflation and a lot of taxes, and a lot of it, the inflation is going to be hidden by government statistics, and it's going to be hidden by, you know, going to the grocery store and the restaurant, and the price might not change too much, but you're going to be getting, and I see this myself, that the portion is like 30% lower. My bill at Target, I shop at Target. I'm just a pretty normal guy. I buy some stuff at Target, and my Target bill is like double what it was from when I was in college. So that was only a little over 10 years ago, and my bill is doubled. So that's not hyperinflation, that's stagflation. That's high single-digit or double-digit inflation every year, just eroding your purchasing power, eroding your standard of living, because honestly, how many people have wage increases like that? There's very few. State of Illinois, 9% entertainment and video game tax. On top of that, they're taxing everything else too. So if you like video games in Illinois and you buy video games and you play a lot of video games around Chicago or in Chicago, they're going to tax you a lot. I believe this is the same Chicago government that also tried to ban ketchup. So at Chicago Cubs games and elsewhere, the ketchup was labeled hot dog sauce. Oh, crazy governments, right? I named it what Cuba's doing, changing the rules, and Illinois. Meanwhile, tons of people are leaving Illinois, right? Because they're trying to jack the property taxes through the roof. Illinois has a really bad underfunded pension fund problem. Oh my God, NYC bit. I can't believe you on a fart tax. What? Is that like a carbon tax? So you're gonna have to wear a meter. You're gonna have to wear one of those wearables, and it's gonna count, and then you're gonna get charged a penny every time you break wind. Okay, checking my notes. I just get some really weird listener requests, guys. So there was one listener, and I think he's a longtime loyal listener. Normally he doesn't post stuff this crazy. He actually wanted me to buy a new laptop and then mail it to my interview guests. What? I read that and I was laughing. I was like, I'm not Joe Rogan, okay? It's not like I have an enormous podcast and I'm making a lot of money from this, or I'm already rich and it's not a big deal. I mean, if some of my guest guys, like, they seem like nice people, but if I actually mailed them a laptop, first of all, like, UPS or FedEx may lose it in the mail. It's more common than you think. The USPS could also damage a laptop, if I sent it there. But some of my interview guest guys, even though they pretend to be rich, a lot of them, some of them are good, honest people, but some of them are not, as I found out later, are not as good and honest and as affluent as they claim. And if I sent them a laptop to do an interview, I might not get the laptop back, let's just say. So they would tell me, oh, I never got the laptop, or, oh, I mailed it. And then, I never get it back. Well, actually, I was gonna wrap up the show on like another truth bomb here. So you brought up the alt media, and so there's a lot of people with YouTube channels in my space that are larger than mine. A lot of them are actually really good people, but a lot of them are not discussing this publicly, that they've been totally financially ruined by YouTube too. And so, they are taking, just to put food on the table for their families and pay their bills, they are taking money from people that they should not be taking money from. Okay? Dishonest, lying people, cheaters, frauds. And they're not disclosing it. Okay? So, caveat emptor, buyer beware. Now, there is good content there, but a lot of the channels that are a lot larger than mine, they will not publicly discuss that they have been totally financially ruined. They don't want to... Off the record, I've had conversations with many of them. They're good people, but they've had to, just to survive and pay their bills and put food on the table for their families, because they had a... And what most people don't understand is, if you put your real name on this content now, things are so bad, so like censor-oriented. A lot of hardcore Democrats are literally going around getting people fired, that if you put your real name on content like this, you basically blacklisted yourself from a lot of different jobs. Okay? I literally get weird emails in the past from employers saying that, we don't think you'd be a good fit here. And I was like, oh, okay. So I think it has to do with the content that I've chose to cover. that I'm exposing a lot of corruption and fraud in the financial industry, in politics here in Washington, D.C., in the bureaucracy. A lot of corporations benefit from it. So YouTube, it's not just me who was screwed over by YouTube. There's a lot of other people with larger channels than me in our space, and they're not publicly talking about it. They're really embarrassed about it, actually. It's sad. Like I said, I've discussed this before. I know people who are making over $100,000 a year off their content, and they're planning on growing their business and investing, and then all of a sudden it went to almost zero. You know, meanwhile, then I've gotten over 30 people on my Patreon who either totally canceled or have reduced their contribution without a message to me. There was one guy who was nice enough to say, like, I don't want to support Patreon. I'm eliminating my contribution to you because I don't support Patreon. That's fine. Thank you for the message. I messaged him back. But, you know, I just routinely and this was before I publicly announced that I'm stopping my free podcast in 6 months. So I'm routinely getting people just canceling Patreon before I even announce that I'm ending my free podcast. Hello, Jessica. Good luck trying to sue Google, YouTube, Facebook. These guys have so much money. Are you American, Jessica? Because the way that I did a little bit of law school and I got an A in tort law, I did a semester of it. I could have done more, but I just hated it. Anyways, I was pretty good at it, but I hated it. So the way the U.S. court system is set up is the corporations can just drag things on and basically bleed you, bankrupt you. So best case scenario for a lot of these people, if there's a class action lawsuit, it's going to take over 5 years. The lawyers involved in the class action lawsuit, if people join up to sue Google over demonetizing them in content, it's going to take way over 5 years. And most of the people suing will not get more than like a couple $1,000, if that. The people who are going to benefit are the lawyers. The first couple lawyers in the class action lawsuit, and that's about it. And this is the game that corporations can play. The court system, as it is currently set up now, is not meant to benefit the little guy anymore. The court costs have exploded. When the suits with badges showed up at my door in August, and I was reaching out to over 30 lawyers with emails, I literally got laughed at by tons of different lawyers who either didn't bother emailing me back or told me there's no way I'd be able to afford them, even if I gave them like 5 or 10 grand. And basically, like a lot of the lawyers around here in the DC metro area, because they all have fancy law degrees from some of the top schools and they work at top firms, they don't really get out of bed unless it's like 10, 20, 30 grand minimum anymore. So thankfully all that bogus investigation was dropped for now. Although I do get stupid IRS letters once a month, weird ones, because I didn't cross a T or dot an I. I think a lot of things are broken. I think a lot of things are broken, but I think there's the old Roman saying is cui bono, who benefits, and I think there's a lot of people that benefit. Special interest groups, large corporations, lobbyists, bureaucrats who are some of them who are making large salaries, they benefit from a broken system. Okay, we are at 43 minutes, and I think I covered, let me check the news stories to see. We are at, gold is at 1288. Silver's at 1550. So we've had a rally here. My analysis of the gold and silver markets is, unfortunately, I think we are going to see a lot of miners like First Majestic Silver come to market and do equity raises. And this is going to piss off a lot of shareholders. But the miners, the CEOs, and the management teams of the miners will do whatever they have to do to maintain their high salaries. This is a new normal that we have, unfortunately. So I would look for which mining companies are doing large share dilution, and I would try to avoid those. But gold and silver are showing good strength. Let me look at the dollar. The dollar is below 97 support now, so that's interesting. Now, I don't want to say the dollar rally is over. So I was listening to some interesting commentary in the last week about analysis of the dollar index. I think it was between Grant Williams and Raoul Pal on Real Vision TV on a discussion. And they basically said that the dollar index has been very volatile, but it's kind of in a wide trading range over the last 5 years. But what I would add is that whenever the dollar got weak, a lot of emerging markets and a lot of like European banks and emerging market banks and emerging market corporations started borrowing even more money, like many trillions of dollars more. So just because the dollar has been in a range doesn't mean that the picture of total debt outstanding, dollar-denominated debt in foreign governments, foreign banks, foreign corporations is the same. So if the dollar essentially was flat for 3 years or 5 years, it's back to 96-ish or 97. So basically there's been a lot of volatility, but the dollar hasn't done a whole bunch over 5 years, according to Grant Williams and Raul Powell in their discussion. But I would add to that the total amount of debt outstanding has increased. And this goes to show that we have Ray Dalio. He's talking about a beautiful deleveraging, right? He wrote white papers on this. He talks about this in interviews all the time. Guy's rich as fuck. But he's been totally goddamn wrong about a beautiful deleveraging. Please show me evidence that there was any deleveraging at all. I mean, maybe people on Main Street who are trying to pay off debt and reduce credit card debt and pay off student loan debt and stuff, but those are not the majority of people. The evidence is that the amount of debt globally has expanded. In fact, the amount of debt over the last 20 years has tripled. So we're up to over 250. There was a Wall Street Journal article today. There's now over $250 trillion in global debt. So, Mr. Dalio, please tell me how that was beautiful deleveraging. There is no deleveraging. You wrote a bullshit white paper to get the ECB to do quantitative easing because you had bets that would make you extra money to do it. You got a private meeting with Mario Draghi that you disclosed in your principles book. I guess when you're that rich, I guess you can like write bullshit books about that. And hardly anyone will call you out on it. And then Mohammed El Arian, who's pretty well respected, he thinks that we're going to have a lot more 1,000-point up and down days each day in the Dow. Basically similar to what I've been saying, that we're going to have a lot more volatility going forward. Volatility is back. Volatility is the new normal now. And so if you're short a lot of things and you don't have the right, this is not financial advice, just my opinion, that if you have the wrong type of short exposure, that volatility could really hurt you bad. North Coast Fish Chaser. I love the graphics. I'm glad you like it. Now, I do think some of President Trump's tweets are good. I think he focuses way too much on Twitter. I'm honestly tired of hearing QAnon bullshit. I'm tired of President Trump tweeting so much. He needs to focus on results. But unfortunately, with the Democrats are going to cancel all these investigations. The Democrats are going to open up investigations of their own. And it's going to be... They're going to turn President Trump into like, oh my God, it's going to be even worse reality TV show in a month. It's going to be a 5-ring circus on a daily basis. They're going to try to indict his kids, his friends. It's going to be a disaster. Hey Taylor, yeah, I recovered more quickly than I thought. I didn't drink as much. Okay, Daniel Garcia, I am reading your comment here. Considering the amount of debt around the world, growth that can never repay the debt, unfounded, I think you meant unfunded pensions, and spending that only grows, surely the U.S. is preparing for large dollar devaluation too. Yes, but the market is waiting. So the market is letting the U.S., is giving the U.S. more rope to hang itself with. And this is why the dollar is not as weak. On a relative basis, people realize that European banks are in way worse shape. That European governments have a big problem, especially Italy and some of these other governments are in big trouble. Hello, Michael. I'm not sure if this depression, if we do have one, is going to be exactly like any of the other depressions. It could be a combination of stagflation mixed with other stuff. The people in power want like a controlled stagflation because if they screw up on the intervention, you have either hyperinflation on one side or you have full free market forces and deflation on the other. I would prefer deflation. I would like to see people go bankrupt. I would like to see corporations go bankrupt that overborrowed. I would like to see people in prison for fraud, but I'm not sure that people in power are going to allow real deflation for maybe more than a short amount of time. I mean, we had some deflation in 2009. Chris Martinson shows it on a chart with credit. It was a tiny little blip, and look at the damage it caused in 2008. Hey, Jessica, I'm glad you like that. Thanks to the economic cartoonist. I always try to pick out something eye-catching for you guys. Not that it gets me any more views on my YouTube channel anymore, but at least some people will appreciate it. Return-free risk. I like your username. That's what Rick Roll says. That's funny. So when will the ignorance bubble burst? It might not. A lot of human adults, especially Americans, don't like to admit they're wrong. I mean, how many people do you know, buddy, that actually take personal responsibility when they fuck up? I would say the percentage has diminished. I mean, I try to avoid hypocrites and people that don't take responsibility for their mess-ups as much as possible, but it's really tough to avoid that. I mean, basically, you wouldn't be speaking to a lot of people anymore. It's really tough to not surround yourself with at least a few people like that. And people are good at lying and hiding that stuff for a while, so it takes some time to figure that out. So, unfortunately, as long as there's, like, brainwashing on TV and sports and people are into stuff like that with, like, celebrity gossip and reality TV, the ignorance bubble is going to keep going. You know, bread and circus works. Different variations of it. That's why you have these governments subsidized with taxpayer money, all these professional stadiums. If you're spending 6 hours on the weekend at a professional sports game, you're not listening to this podcast or reading up and learning how messed up the whole system is. Bread and circus works. Propaganda the way it is now, the old Soviet propaganda, the old Nazi propaganda did not work. People did not believe it. The way the mainstream media has done it with, like, CNN having a real witch on to say that they resent Trump saying the phrase witch hunt all the time. I mean, that's a version of propaganda, guys. I mean, CNN had, like, people claiming to be witches on and then bashing President Trump on that. I mean, this is the type of level, and CNN used to be credible. They're not anymore, but I mean, there used to be. They've just totally sold out for ratings and Project Mockingbird. And if you believe Phil Giraldi, former CIA agent, there's a lot of people on the CIA payroll at CNN and Washington Post and New York Times, just to name a few. From Eddie, taxation is theft. Yeah, I agree, taxation is theft, but we're a minority, man. Most people don't agree with us. And this is the problem with a pure democracy. You have people voting themselves that either more free stuff or forcing you to pay taxes on things you don't want or need. So, unfortunately, Eddie, unless you are affluent and you can diversify your assets in different countries and you can have multiple passports and you can live in different countries throughout the year, you're going to be subject to some of this stuff. And some countries are already worse than others. It's interesting, the stuff that's going on in France, because, you know, I brought up prescription drugs and how President Trump was saying he would get prescription drugs lowered. He would get more generics approved from the FDA. That has not happened. And prescription drugs on non-generics have increased rapidly still. I think like double digits, like 9-10%. I think I saw the graphic earlier today on Fox News. But I think one of the main reasons in France, besides the gas tax, is that even though France, I believe, has universal health care, that I think like 80% now of prescription drugs are no longer covered in French healthcare. So if you're in France and you need certain types of prescription drugs, that you're paying like it's not covered in your healthcare. So this is probably, even if the U.S. passes universal health care, like, it's not going to cover as much stuff. I'm hearing in Canada on their universal health care, when I was up in Toronto a couple times, I saw on TV commercials that they're selling supplemental health care plans now, private ones, because a lot of medications and other stuff are not covered by the universal health care in Canada that you pay very high taxes for. Our Canadian listeners can chime in on that, but I saw TV commercials when I was up in Toronto, so I think that would be pretty accurate. I honestly don't really care about the repo market or repo bonds or all this stuff. I know the European banks are bad. And the question is, what type of counterparty risk are we looking at with American banks? The emerging market banks are bad. It's mostly the European banks that gave out the loans to a lot of the emerging market banks, but there's also some exposure that Goldman Sachs and some of the others have, because Goldman Sachs sent around like people to sell like US dollar denominated debt to foreign governments, foreign banks, foreign corporations. If a big enough bank fails, though, it will create contagion. So ultimately, most people don't know about the currency swaps. So as long as most people don't know that it's covert quantitative easing or a backdoor bailout, they will maintain doing the currency swaps as a preferred method of bailout going forward. Because right now, guys, like the sentiment for quantitative easing and announcing bailouts or QE is just like, most people are familiar with what the word bailout means. So if you just announce that there's a currency swap line and you don't say in the news headline it's a bailout, then even if you just say it's a currency swap line, the average person won't understand. So that's how they can get away with that going forward. So until more people understand that the preferred method of bailout has changed since what happened in 2008, then I think they will continue with the currency swap path. I mean, ideally, they're not ideally, but from their perspective, ideally, I think they're just going to continue to do the same path, that they're going to pretend that the banks are sound, that stock market's still in a bull market, even though it's in a bear market, and they're going to do what they have to do behind the scenes. My source, and I broke this in 2014, was telling me that the currency swaps never stopped to go into Europe and European banks and European governments after the 2008 financial crisis. So the people here in the U.S. and the banking system and the people on CNBC and Bloomberg were saying, we're through the crisis, there's green shoots. Larry Kudlow was on CNBC saying everything's fine now. And in actuality, from what I heard, that, you know, Europe was on life support. The U.S. was still bailing Europe out since 2008. Never stopped. Okay, well, we're at 57 minutes now. I have a bunch of comments and questions here. There's just too damn many right now. If you want to have your question or comment answered later, you can just post it under the video after it's done, after the show's over, in the comment section. I'm going to go relax right now. I'm still tired from the gym. I did 45 minutes of cardio and I did leg press. So I'm pretty beat. I need to ice down my knees now. Okay, bye for now, guys. Everyone have a good week. I'm going to work on getting some content. I think I've been through 6 different audio programs to try to do interviews. It looks like Zencastr is basically done. Oh my god, it's unbelievable how many of these different programs I've had to try. Thank you, Nick. Shout out to Nick. Thank you, Nick, for freeconferencecall.com. I think I'm going to be switching to that one and trying that one out. That one looks like I can do a normal phone call through my computer, call someone's phone number, because a lot of the guests I interview are not super tech savvy, so using Zencastr is probably too hard for them, unfortunately. So that's one of the reasons I think things were going wrong. But if I just do a phone call, if I call someone with my microphone and my laptop, and then I call someone's phone number and they pick up, and I can record that with freeconferencecall.com, I think I can record that on that website, download the audio, and then either edit it and get it up for you guys. So I am trying. It's just a pain in the ass with all the stuff. I don't know if my stuff is being intentionally sabotaged or what, but it's been a pain in the ass to get you guys the recorded interviews lately since Skype stopped working for me on September 1st. Okay, guys, well, that's it. Bye for now.